If you've been learning trading, you've probably heard this before. Higher highs, high lows. Oops, let me make it bigger. Higher highs, high lows, lower highs, lower lows. Now, most people stop learning there, and that's why they find it hard to do trading, right? Now, let me go a little in, not say in depth, but let me go through this with you guys, all right? A uptrend is basically making higher highs and higher lows, right? So in this right here, what would you call this? I'm just gonna put it as HH for higher highs, all right? So you call this high high. Oh, and this would be higher low, right? This would be higher high, this would be higher low, this would be higher high, and this would be higher low, right? That's basically it. When you see this, basically the market is making a uptrend, right? Now, let's say, right, instead of this, market is now making something like this, right? So what would you call that? This becomes a lower high, right, and a low low, right? So when you see things like this, that's when you know that the market is in a downtrend, because it's making what? Lower low, lower high, lower low, lower high, lower low, lower high. Simple, right? But here's why and where traders get into trouble just trading out of market structure. Right, we're gonna look at a real example right here. All right, so I'm gonna show you guys this is on the 1 hour, right? And let's say this is the structure that it's moving towards. All right, what do you see over here? Right, market from here is going here, right, doing this, reacting of something, going up, goes down, goes up, rejects of something over here, right? So what is this showing you, right? It's literally telling you that it's going up. And why is this telling you it's going up? High high, high low, high high, high low, high high. Although this is here, right? If you have been trading with market structure and all that, you know that this is a rejection candle, right? And you know price, whenever it goes up, it rejects of something. Like for instance, right, it came to this fair value gap, rejected, moved higher, right? Even this tiny one right here, right, it came down, rejected of this fair value gap, going higher, right? I mean, even this 1 hour, right, came down, tapped this, and rejected. So at this point, you would be thinking that, oh, okay, we're gonna make a high round, right? So would you buy here? Definitely, right? Because it's showing you a buy point of view, like it's showing you we need to buy, right? Cool. But now, most people would buy, and let me tell you why you shouldn't buy. All right. Just because the market structure is going up, it doesn't mean it is continuously going to go up. So this is why context matters. All right. Now, market structure tells me what's happening, right now, what's happening. But daily bias helps me decide whether I want to participate in the market. All right. So I'm going to show you why you shouldn't have bought this, right? So this is on the 1 hour. So if we go to the 4 hour or even the daily, right? Okay, daily doesn't show me much. Cool. Let's go to the 4 hour, right? On the 4 hour, what do you see? We are also seeing the market structure going up, right? Good enough. But what else do you see? We just disrespected a 4 hour fair value gap. Number one. Number two, we just created a imbalance in the market, right? So if we created an imbalance in the market, and on the 1 hour, right, if I am going to react off this 1 hour, right, like this, and if I reject out of it, obviously I'm going to know that, okay, my 4 hour holds a better power, Even if I'm swing trading, right, I would buy, or I would sell something over there, right? Maybe aim these lows right here, or even these lows right here, because the market just showed me that it wants to go down. And good enough, look at that. Market went all the way down. Now, I didn't even do confirmations. I didn't even do anything other than that. All I had to do was just look at what price is doing, what the market is doing on a higher time frame to a lower time frame, right? Basically, you just need to remember this, right? Market moves from liquidity to liquidity, right? It needs liquidity to move, right? So market structure is just a tool, right? Not a complete trading system. Use it with context and it becomes powerful, right? If you use it by itself, it does work, but often you'll find yourself on the wrong side of the market. All right, so remember, when the market is showing you a market structure, that doesn't mean it is where it's going. It might be a reversal, it might be a retracement. So you have to look at the higher picture or the higher time frame for context, like what I just showed you. All right. So, and always, as I always say, remember, the market will always be there tomorrow, right? But your capital might not. So always protect your capital. And I'll see you guys in the next video. Peace out.